Welcome back. You're watching us here on Budget Breakfast with Mangalam Malu and Nigel D'Souza. This is your budget headquarters on CNBC TV 18. We've told you what the expectations from the budget are, but let's tell you how the street is faring as well. So let's take a look at the overnight cues first. On Wall Street, stocks gave up early gains after White House announced tariffs will start from Saturday. That is today. The S&P 500 shed 0.5%, while Dow Jones as well closed about 300 points lower. The tech-heavy Nasdaq Composite slipped 0.3%. The White House announced that Trump administration will be leveling a 25% tariff on Canada and Mexico, alongside a 10% duty on China as well. On the macro front, inflation closed out 2024 on a strong note as personal consumption expenditure in the US came in well above the central bank's target. The PCE price index increased 2.6% year over year in December, and we had the core PCE excluding food and energy, which was close to around 2.8%, while both were in line with expectations but well ahead of the Fed's 2% target itself. That's about Wall Street. The important part is how D Street is. And Nigel, when you're going into the budget, the mood has been fairly somber. Yeah. If you look at, all the way from the top, we have the Nifty, which is down almost 10.5%. The Nifty Bank, which is down almost 9% from the top. We have the mid-cap and the small-cap indices down anywhere between 11 to 14% as well. We keep an eye out on all of this. Why is it that there is so much weakness? The biggest reason is the FII selling. If you look at it, in the month of January itself, the FIIs have sold almost $10 billion. And in the prior quarter itself, they've sold about $20 billion out there as well. So $30 billion outflow. The DIs have done well to match the FIIs selling dollar to dollar, but cash market selling from FIIs has definitely hurt us, and more so it's hurt the rupee as well. So while the Nifty is down about 11% from the highs on a point-to-point basis, if you adjust it for the currency weakness that we've seen from the highs, the Nifty is actually down 14%. A lot of cash market selling weakness is there in the cash market itself. Is there this weakness in the F&O space as well? Well,
that's right. Mangalam, just to build on to that point, in yesterday's trading section, actually the FI net sell number was a little bit lower. So the hope is that, in fact, it's reaching some level of exhaustion. At least that's the hope. But as you said, let's look at the F&O market. Well, yesterday, no prizes for guessing. They added more shorts than longs yet again. And in percentage terms, now the net short positions are at around 88% or thereabouts. And this is the highest ever we have seen in terms of percentage terms. Remember, there was a contract regrouping out there and the resizing out there. So we're looking at it in percentage terms. Highest ever short positions you've seen in percentage terms since October 2023. And getting to a budget, I went through last few budgets, getting to the budget, 5-6 budgets. We haven't seen the FI's net short close to around 88% or thereabouts. What about the index futures? Well, if you look at the clients as well as the FIs are aggressively net short, but the clients, they are aggressively net long. So both of them on the opposite ends of the spectrum. And the FIs actually have been having the upper hand. But if the finance minister has something good to offer, then maybe those FIs, they get stumped on the wrong side. What about the options data? The FIs have bought more calls than puts, as that data point is telling you. But it seems it's hedged because they've also written more calls than puts out there. So the short point is, if there is a positive surprise, these FIs, they could be caught napping. They could be caught on the wrong side. So we'll watch for a short covering bounce, if at all, there is some good news. Because in the last few sessions, we at least haven't seen any big short covering bounce, particularly from the FI positioning.
We take that point, and we can't blame the FIIs for that as well, because the mood of the market right now is fairly somber. Not only has the Nifty corrected about 10-11%, but there have been reasons for that as well. If you look at the fundamental reasons for the same, the second quarter and the third quarter earnings so far that we've gotten, they've been fairly forgettable. And it's not just corporate earnings that we're looking at. The government capex has also been delayed for various reasons, elections, etc. So pumping that once again, or deploying that once again, would be extremely crucial. We've heard from consumption companies and a lot of others also talk about urban consumption slowdown, even as rural is gradually recovering. And all these are domestic problems. Look at the geopolitical uncertainty that we had. We had the US election around Trump, and then suddenly we had these AI battles between the US and China. So the mood is fairly somber. The big question, however, is what is it that the bulls want? 3 things that the bulls will be looking at.
Well, that's right, Mangalam. The 3 things that the bulls will want. And for me, I'll be looking at the capex expenditure number very, very crucially. Because last year, the markets, they cheered that number. Yes. Unfortunately, the spending hasn't been as much as what was laid out. So around 11 lakh crores, what was laid out, we're going to be falling short of that target. But how much do we fall short of that? And what is the projection for next year? The street would want, a number close to around 11.5 to around 12 lakh crores approximately. That will make the bulls very, very happy. So that's point number one. And as we know, capex spend is a multiplier. Point number one. Point number two, don't tinker with LTCJ or STCJ. If you want to cut it, that'll be great. But don't tinker. No hikes out there. So that's the second point that the markets will look forward to. And they'll say budget will go down, okay. All eyes on the next, next week itself, because then you have the RBI. And in the last few days, they have been taking measures via the OMO and other routes to put some liquidity into the system. So that's the next trigger. 3 top points: capex spend, don't tinker with the LTCJ, STCJ, and also then the RBI comes in for the final flourish.
And once they, pump prime some of the consumption as well, with the RBI cutting rates, all of that will then have a multiplier effect on the economy itself. And the biggest beneficiary of that, or the biggest way to play the GDP growth, would be the financial space. If the RBI does have to go ahead and, cut those rates on Feb 7th, it's the Nifty Bank that we'll be looking at. The last few trading sessions, we've seen signs of life coming back to Nifty Bank. So it's above the 20-day moving average. From where it is right now, it has about 1,000-point headroom from here as well. So are we looking at the Nifty Bank around 200-day moving average, 50-day moving average between 50,800 and 50,900? We cross past that, then maybe, we go to much higher levels as well. So that 1,000-point gap headroom is available for the Nifty Bank. What about the main index, the Nifty?
Well, the Nifty, if we pull up a chart, Mangalam, the 50 and the 200 EMA should come up for our viewers. And if you look at that chart, it's telling you that around the 23,800, 23,900, that's where there should be some kind of resistance on the upside. On the downside, you already have your reference point, which would be the 22,800 mark, which incidentally is the recent low. So that's the broad band we're looking at. But if the Nifty needs to swing around, there's going to be a big boy, ITC, that's gone into this, into budget day just yesterday. You saw a good pop out there. And that's always the stock in focus. Mangalam, please tell us, what do we expect of that?
Well, the ITC stock, if you have to, summarize the budget into just one stock, it has to be ITC. And why is that? Because if you look at the ITC range over the last many budgets, right from 2020, even if you go back all the way up to 2018, on a daily basis, the swings that we see on ITC are more than 5%, 10%, at times 11% as well. So that is the one stock to watch out for and has a fair weight on the index as well. Any tax increase leading to sub 10% of overall price impact would be a positive for ITC, because that will not harm volumes as much, and that will not harm, the illegal, the legal cigarette industry, because any more than that, the illegal cigarette industry continues to thrive. Add to that, you have any measures coming in on the dividend front, maybe ITC has a play out there. You have any measures coming in from the consumption front, ITC has a play out there. You have any measures coming in from tourism or urban consumption, ITC has a, foot in the door out there. You look at rural, ITC has a foot in the door out there. So if you had to, make a microcosm of the budget, it has to be ITC. That's the one stock I'll be most definitely looking at.
Well, and rest assured, Mangalam will be on top of that. We'll be telling you the impact of any kind of tweaks with regard to the duties out there. But, Mangalam and me have gone on for a goodish bit. Let's spice things up. The audience wants to hear what's on Hormuz's radar today. Hormuz, tell us, there are going to be a few stocks reacting to various news pieces. Take it away.
Morning, guys. And yes, it's a big day. And of course, you keep an eye out on the usual suspects, right? The defense names, railway names, capital goods names. But of course, can't not ignore earnings. And there'll be plenty of earnings reactions in today's session. It'll start off with IndusInd Bank, where the numbers of the profitability was down 39% from last year. The NII operating profit was also lower. Asset quality saw a marginal deterioration from the previous quarter. So we'll keep an eye out on that. ONGC reported numbers as well. You can see that on most parameters, the numbers were higher than expectations. But on a quarter-on-quarter basis, they were fairly okay. And Bandhan Bank, the numbers, of course, you keep an eye out for. The two numbers that you should watch out for is the slippage number, which was higher on a quarter-on-quarter basis, and the write-offs figure that has seen a significant jump compared to the previous quarter as well. Now, Vishal Mega-Mart, first number released after listing. It's a recent listing, of course. The revenue growth of 19% was lower than the historical band, which is 24 to 26. And the also management said that there is subdued demand conditions within the consumer industry, and you see that in results of DMart as well. And the same store sales growth also stood at around 10.5% for the quarter. And there are some top level exits that have come in aside of the earnings. Watch out for Hero MotoCorp. Of course, they come out with auto sales numbers today, but CEO Niranjan Gupta has decided to step down. Vikram Kasbekar will also be the acting CEO from the 1st of May. And also watch out for Z Entertainment, because its acting CHRO Dheeraj Jaggi has also quit, citing personal reasons. And lastly, keep an eye out for Tata Power, where the company has signed an MOU with Rajasthan Discoms, various Discoms, to accelerate the rooftop solar adoption. So there are plenty of stocks to watch out for. It's a big day that's in the offing. Back to you guys.
All right, Hormaz, thanks a lot for that. Just before we, prep up for the big day once again, tell you what's happening in the budget, get on top of that as well. Nigel, I was quite intrigued by the color of your tie and your pocket square. It's pink. What does it signify?
Well, Prime Minister said, right, the budget is going to have something to offer for ladies, for women. So that's one reason. The other factor is maybe the economy gets back into the pink of health. So that's the reason for pink. But what about you? What's with the color?
The green. Market wants to be in the green. That's what the budget wants. And you want, sustainability. At the same time, you also want the dollars to come back. What is the dollar called? The greenback. That explains the green and the pink. With that,